Hello, everybody. Welcome to the Fundamental Analysis webinar here with AvaTrade. My name is Troy. I'll be presenting. One thing to keep in mind, as always, no one trade is guaranteed to profit. There's risk with each and every trade that you take. So it makes sense to manage risk in a way that creates the amount of exposure that you would like to have on each move. You can do that in different ways. Obviously, managing trade size and potential stop loss settings makes sense in many circumstances. You also can use an advanced tool that's available on our web trader platform and on our AvaTrade Go mobile app called AvaProtect. It's a nice feature for small premium cost. You can protect against any and all losses for defined time periods. So that's something you might check out as well for part of your risk management. And we'll take a quick look at that maybe as we get going. Also keep in mind that what we cover is meant to be educational in nature and isn't meant to be financial advisement. So what is fundamental analysis? As we get into some actual news and economic information that's come out, we'll go over the basics first. What is fundamental analysis? Well, it's exactly that. It's news, it's economic information that's coming out. There are different types of fundamental news or information. One would be what we call regular economic events, and those we'll look at an economic schedule typically for the regular events to see GDP numbers or oil inventories or unemployment figures that come out, etc. Those are scheduled for exact days, exact times for different regions around the world, and easy to follow those types of fundamental announcements as the information comes in, and then trade accordingly. The other type of fundamental news is maybe a little bit harder to plan for in terms of timing and scope, but there are still ways with pending orders to be ready for the unexpected headlines, what we might call extraordinary economic events, whether it's something to do with regional conflicts or virus outbreaks or whatever it might be that can unpredictably happen. Those types of headlines can hit at any point and move the markets, and you can be prepared for them within your strategies. And we'll talk a bit about how you can do that as well as we get on the live charts. So if you have any questions as we go along, if you want to maybe give some information to share as well, please chime in the chat box. I'm happy to share information and also answer questions as we go along. So real quick, let's take a look at the main headlines that have come out, and then we'll get in on our web trader platform, take a quick look at that before we jump on the MT4 platform. And so what are the headlines, the fundamental news that's out today, so we can get a feel for which way we think the wind is blowing today in terms of the sentiment. US job openings jumped to fresh record high in April. That sounds like good news. Okay. It always helps if there are record high job openings. The only problem with that is the next headline. Small business optimism slips on hiring and inflation worries. And so what they mean here is, yeah, there are a lot of job openings, and that's good news. It means the economy's opening back up and businesses are ready to open. The problem is a lot of people maybe are collecting unemployment still, and they just don't want to work. And so the small businesses especially are having trouble finding workers. There's a worker shortage in the US that's occurring right now. So if you go on to read the article, they say there's a labor shortage and inflation worries, okay, weighing on small business owners. And so we go from a good news headline that there are a lot of job openings, and that sounds great, to the other side of that, small businesses, which are by far the largest part of the economy in the US, if you start to talk about job creation and how many thousands and thousands and literally tens of thousands of small businesses are trying to reopen. And so That's something to keep an eye on, and that has created some volatility today. We see the movement on the markets today is indecisive, and that's exactly what we see here. Indecisive headlines. One's positive, one's negative. Okay. Here's a headline that's pretty good out of the Eurozone. Economic dip milder than expected in first quarter. Well, that's a little tricky, right? We're talking about an economic dip that's negative, but it's milder than expected. That's positive. So again, we've got mixed news here. We do have an economic dip in the Eurozone, but it's milder than expected in the first quarter. So, okay, again, not the type of news that's going to cause the markets to go flying one way or the other necessarily. Again, kind of mixed news in the headline. US EIA cuts 2021 world oil demand. Well, okay. We see that economies are opening up and oil has been hitting recent highs. And then at the same time, we see the US EIA saying, well, we don't think the growth of the demand for oil is going to be quite as much as what we were thinking. So again, mixed kind of news on the day, and that's really the storyline today. That's kind of the what's been happening is volatility up, volatility back down. The futures were in the red, now they're mixed. The markets open red, and now they're half green. And so we see it right here: red, green, red, green. Volatility up only 1.22%. It was up more earlier. Now it's down. Dollar index kind of flat. Makes sense. The strength of the dollar tends to go up when there's a lot of fear and the market's dropping. The strength of the US dollar tends to drop when the markets are going up and there's low fear. And so since markets are mixed, US dollar not changing a lot. Up 0.13% on the dollar index. So the US Energy Information Administration telling us that demand for oil maybe not as high as they expected, maybe less by 10,000 barrels per day than what they expected this year. And if they look at next year, they're even predicting 90,000 barrels per day less demand than they had anticipated. So what might you want to do on oil based on that fundamental news, especially if oil was hitting recent highs? Yeah, Lucas, exactly. That's what we tend to see, the dollar index strengthening when people are trying to get rid of risk. When you see a sell-off occurring on the stock market, there's been a bit of a sell-off on cryptos, maybe more than just a bit. Usually you see the US dollar start to strengthen during those times. That makes sense because the US dollar in general is seen as one of the safer currencies around the world. Now, the US dollar's weakened quite a bit through the pandemic because of all the trillions in stimulus that's been handed out in the US. I think by far the most stimulus handed out of any country, value-wise. They're working on over 4 trillion now in stimulus already passed out and more maybe to come. So that's really been weighing on the strength of the USD and still could. And that's really been helping to drive gold up as well as a safe haven against an inflationary US dollar, a weakening US dollar. And so there's still some inflation fears on the market, which is why volatility is up a bit too, and why gold has still been bullish. So this is all something to keep in mind as we go to look at the charts soon. Crude oil retreats from recent record levels. That's the headline today. Okay, we understand why. The US EIA in the prior headline here is saying that they don't expect oil demand to be as high, the growth to be as much as they were expecting. Okay, and here's another headline: stocks touch new highs as volatility eases. So all of this going on, mixed news. Some of the stocks still managed to hit new highs, believe it or not, which may give you some opportunistic entry points if you're thinking about potentially shorting them, if you think there could be a pullback. as there could be with oil, with that news about oil. Okay, so if we go back to AvaTrade's main website, I mentioned AvaTrade Go. It's our mobile app that has Ava Protect and some of the other more advanced features available when you trade on your MT4 or MT5 accounts. You can use AvaTrade Go to do that. It's an award-winning mobile app with advanced features in the order window for managing risk, calculating exposure before you ever place a trade. So AvaTrade Go is found here on our website. If you come with your mobile device, just click AvaTrade Go, takes you to your app store, or you can just find the app in your app store if you keyword search AvaTrade Go, and you'll see it has Ava Protect, other nice features in the take profit and stop loss, calculates exposure, potential profit before you ever buy or sell. Very nice functionality. And you have the same if you log in from our main website here. You have those same features on our web trader platform, which we're looking at now here. Okay. Very user-friendly features in the web trader platform. So if you're not in love with the MT4 or MT5 platforms, or even if you were, you could try out our web trader and trade right on top of those accounts. It's just a more user-friendly interface. Easier to search for instruments, etc. So if I bring up an instrument, doesn't matter what it is. I think I almost always use gold as an example because I know that gold is one of the instruments that has Ava Protect. Okay, so if we're buying or selling on gold, doesn't matter. Here's the order window, and the order window would look very similar for any instrument. Right now, we're talking about gold, silver, and FX pairings that have Ava Protect available. Ava Protect is available on those instruments because they're traded on what we call spot prices, not futures. Lucas, I didn't read the rest of your question. Let me look at it. Okay, so Lucas, you're asking about the 10-year Treasury note. So the Treasury notes, when there's some anticipation of maybe a market shaking event, if fear is rising, you tend to see people start to buy into the Treasury notes. And so if you see the Treasury price, the price of the Treasury notes go up and the yield go down, that means there's higher demand for Treasury notes. So if you see the price of the note go up and the yield go down, that means there's a rush into Treasury notes. And you'd say, okay, well, if people are rushing into Treasury notes, why would the yield go down and the price go up? Because that's supply and demand, right? If you're a bank and you're offering Treasury notes and all of a sudden, you know, there's a lot of fear on the market and everyone comes rushing in to buy into your 10-year Treasury note, you're going to raise the price then because you say, there's a high demand for Treasury notes now. There's a lot of fear. So you raise the price on Treasury notes and you lower the yield that you're offering because, hey, everybody wants it. So I'll pay you less of a yield and raise the price on you because I know you want it more. So when you start to see the 10-year Treasury note price go up and the yield go down, that's a sign that there's increased demand for those and can be a sign that maybe there's a bit of a sell-off starting off. Okay. And also a lot of investors are watching the opposite. If the price for the 10-year Treasury gets too low and the yield gets too high, meaning there hasn't been enough demand for Treasury notes, so the banks are offering a really high yield, real high payout, and they've lowered the price, the cost of the 10-year Treasury note, that sometimes is a sign that there could be a flip as well, because that starts to become very much something that you might be interested in if the markets are reaching all-time highs and now you're afraid there could be a sell-off. So Treasury notes absolutely are looked at, and can be a trigger as sell-offs potentially occur. AvaTrade Go, someone's asking about that. So AvaTrade Go has these same features that you see here, but it's our mobile app. So AvaTrade Go is a mobile app that will trade on your MT4 and MT5 accounts that we offer. It's built by AvaTrade, and it has much of the same functionality that you see in our web trader platform. So they go hand in hand for trading on your accounts. Okay, the way AvaProtect would work, if whether you're on our mobile app or on the web trader, if you decide you want to trade a certain number of ounces and maybe you look at the stop loss and you say, wow, you know, if I'm buying and I put my stop loss at, let's say 1850, you might think, wow, I'm risking $845 in this example. And you could say, you know, maybe that's more than I want to risk on this move, but I still want the potential profit. You know, if the price goes to 1950 in this example, let's get 1950. Okay, then I would make over $1,000, right? 1,144. See, it's calculating it for me. The AvaTrade Go app does this for you as well before you open your trade. So I like the possible profit, but boy, maybe I don't want to risk half of my balance almost to my stop loss. So maybe I decide, you know what, let's use AvaProtect. Maybe I expect a lot of movement in the next several hours, and I only have to pay a small amount of for protection. Or maybe I even want to go 1 day or 2 days. And I say, wow, I can hold this position for 2 days, fully protected against any losses by paying only $158 and change as a premium. Any losses during that time period are paid back to me. And if gold goes the right way, even $10, I make back my even $15, $16, I make back what I paid for the premium, and the rest is all profit. So this type of setup is very nice. It's a unique risk management tool, and I would say check it out. It's available on your demo accounts now as well. We've added the functionality on in many regions on the demo account as well to try out the AvaProtect feature. Okay, so let's go then to the MT4 platform. I want to take us to the MT4 platform, and we've got it here. Okay. And so as I'm looking at the market movements, and we'll work on maybe some strategy concepts here. And so if we're looking at crude oil, I'm on 4-hour candles. What do you expect maybe to happen with crude oil if the forecast for the growth demand for oil has been lowered? What would you expect that type of news to do to oil? If the growth demand for oil unexpectedly was lowered like the headline showed. So you see here a resistance level on crude oil, and this is the 4-hour candles. And you see just this week it hit that price and dropped. Now we're almost at that same high, and we're seeing some resistance to climbing. Gerard, I don't have any specific information on APIs right now, so but you could check with your account manager. Okay, so we're looking at crude oil reaching a resistance level. We've got a headline with kind of a mixed news day, a headline that maybe is negative for oil price right now. A couple headlines maybe that were negative. One is small businesses are having trouble finding enough workers in the US. Another is, there was a decrease in economic activity, but maybe not as much as expected in the European zone, etc. That was the type of news we saw. And so maybe you would expect a potential pullback in crude oil with that type of fundamental news. And if that's what you think, then this is a pretty easy move, technically speaking. If I'm selling on crude oil, I've got a resistance level right there that I can put with very limited risk. I can put my stop loss above the high of the week that it looks like we're having a little trouble breaking past. If we go to 30-minute candles, we can see some hesitation up here. It looks like it might try and test this price. And if it pulls back, boy, you could have a nice potential profit here without breaking any major support levels right down here, just before 68.5. So if we go back to, say, 4-hour candles, we see we're putting our take profit before it would have to break this support area here on the 4-hour candles. We see it tested this level 3 or 4 times. So if you're scalping, you might take profit here, which we've got about 3 times the potential profit compared to the risk with this setup. And on a news day where the sentiment is mixed, the volatility is low, perhaps that news about the growth forecast for oil being lowered, perhaps that news is enough to pull oil down from this high this week and test this support level again. Lucas, good question. These types of questions I would probably save for your account manager, but I can answer that real quick. Inactivity fees on unfunded accounts do not occur. If you funded an account, then you need to place at least one trade or have a trade running once every 3 months. It's really not hard to do. Even the smallest lot size, once every 3 months, you'll avoid any inactivity fees. Okay, good question. All right, so we see a resistance level. We see a setup. We've got the fundamental news maybe on our side. We've got about 3 times potential profit compared to risk, and it's off and running. Okay, that's a combination setup based off of the fundamental news situation right now, and with a nice technical entry point where we don't have to risk much to get past the resistance, and we can take profit before the main support. Okay, if we take a look at gold, we can see something similar here. US dollar strengthened a little today because the fear was up a little, volatility was up a little, gold pulled down a bit. And when we look at the 4-hour candles, we do see a resistance level up here, and that's around 1915. Gold's sitting now at 1892. And since there are still some inflation fears out there, it's possible gold could test this week's high up here. Okay, last week's high even up here around 1915. If the US dollar continues to strengthen, obviously that would be a sign that gold's ready to sell off a bit. So you've got to keep an eye on the level of fear. And today it's almost flat. US dollar is not rapidly strengthening or rapidly weakening. The fear index, the volatility index, was up barely 1%, a little bit more than that. So it's not easy to get a read on the short-term movement of gold as to whether it wants to challenge the resistance or drop to the support. So fundamentally speaking, on short-term moves, gold's a hard one to get a read on. There's not a good fundamental direction in the short term. In the longer term with gold, we're looking at possible continued stimulus in the US, in the trillions maybe, infrastructure deals, all kinds of stimulus talk in the US still. And if that passes, then you could see another surge up in gold with US dollar weakening again. But you might wait, get a better gauge on gold for short-term moves to try and pick a time where the fundamentals are a little easier to read short-term. long term, I think maybe it's a bit easier to understand. If more stimulus comes in the US, you might even see I could slide this line up and say maybe it could even challenge the high from back here in January, okay, which was what, 1955, back in early January, late December. And so that would be quite a run up. So longer term, maybe it's something you'd want to take a shot at if you have some inflationary fears like are still out there, with gold potentially being bullish in response to inflation fears. In the short term today, I think I was more comfortable with the location and the idea of what oil might do. But by all means, if you've got a strong read on what you think will happen today, you've got a nice range here, resistance and support that it's weaving between. So if it gets close to this support, a pending order to buy, a buy limit off this support level can make sense. And if gold gets near this resistance, a pending order, which would be a sell limit to sell from the price up here. Okay, I tend to be more patient when the fundamental news is not so easy to read on an instrument. Then I'm more patient, technically speaking, in terms of the technical analysis. I want a more perfect entry point. So if this comes up closer to the resistance, then I'll sell, because the news is not so strong today that I think it should break the resistance necessarily. So then selling with a sell limit pending order from somewhere up near this resistance makes sense on a day like today, because you expect more ranging movements, meaning movements that go up and down within a price range with a high and a low, weaving like this, like it's been doing. If it was a day with really strong volatility, either on the plus side or the negative side, then you'd be looking at potential breakthroughs of resistance or support, and maybe prepare a sell stop or a buy stop pending order. But today, the limit orders, sell limit and buy limit, seem to make sense for gold. If the price gets near 1900, 1902 up here, a sell limit kicking in and selling, you'd only have to risk a little to make potentially a lot more if it challenges the support. And if it comes down to the support, you only have to risk a little to the underside to go after a lot more profit if it ranges back up like it's been doing. Okay. Let's do an example of pending order, in case some of you are not familiar with the pending orders. A buy limit would buy from this price down here, 1885, let's say. And the stop loss below that support level, let's say 1882. So I'm only risking $3 per ounce. Very small risk distance-wise compared to the potential profit. All the way up to 1902 is the resistance. Okay, so there's a pending order that if it drops to my support level, because it's a low volatility day, I expect maybe my support level to hold. So a buy limit down here makes sense, like we did. Small risk to get below the support level. Maybe I pull that down just a little to get below these wicks on the support level. And now my potential profit's about 3 or 4 times what I'm risking. Okay, and then I can set up the same thing for the same reason. It's a low volatility day. So if the movement comes up here, then I have a buy limit pending order to sell from just below the resistance, let's say at 1899, just before 1900. And my stop loss then could be just above 1900, say 1903, risking maybe $4 per ounce. And my take profit down here, 1885, just before the support level. Whoops, I think I put an incorrect parameter. Let me check. That's because I wanted a sell limit. 1899 at price, 1899 is where we get in up here. Sell limit, sells from a higher point. And we've got our stop loss higher, our take profit lower. Perfect. Now we're good. And you see, if you do that, if you accidentally pick the wrong type of pending order, it doesn't let you place a bad order. It just tells you, hey, you made a mistake. And if that confuses you, like I just made an easy mistake. I meant to put sell limit and I put buy limit. So Natalie, thank you. Yes, it's a sell limit because I want to sell from a higher price. So that you don't have that type of potential confusion, if you place your pending orders from the web trader, okay, let me show you. If you go to the web trader platform, and if I was trying to place a pending order on gold, let's say, from this platform, all I have to do is put execute when price hits. I put the price I want it to buy or sell from, and that's it. It never asks me whether it's a buy limit, a sell limit, a buy stop, or a sell stop. The platform will already know. If I'm telling it to buy from a higher price, it'll automatically make it a buy stop. If I'm telling it to buy and I program a lower price for the execute price, it'll automatically make it a buy limit if I'm telling it to buy from a lower price. So you don't ever have to know what those terms mean or even pick those options, because all you have to do is tell it the price of where you want to buy from or where you want to sell from, execute when price hits, and it makes it the right type of pending order automatically. So it's foolproof, which avoids the potential mistake that you can make like I did. It was just an oversight. Of course, we know what a sell limit is, selling from a higher price, but you click the wrong thing because you're looking at two different things at once, and it can happen. So it's a nice feature of the web trader that you don't have to individually pick the type of pending order. You just tell it the price to buy or sell from, and that's it. Okay. So we've got our sell limit pending order program to sell from up here if the price gets near the resistance. We've got our buy limit pending order program to buy from down here if it gets close to the support. Why does that strategy make sense today potentially? Because the volatility is low and we have mixed news. A little bit of inflation fears, but not a lot. And so some good news, some bad news economically, that usually results in what we're seeing here, ranging up and down between the support and resistance. Okay, let's take a look at maybe some cryptocurrencies. And real quick, let's look at the indices. We see that they also seem to have capped themselves with resistance up here. We see resistance, 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 and support. Again, the market is ranging right now. It's not huge fear. It's not huge positivity. The sentiment is mixed. So again, and I'm not going to go through and do pending orders for all of these, but if this movement got near this resistance up here, I might look to potentially sell. Programming a sell limit to sell from up here might make sense. Same with a buy limit to buy if it gets near the support level down here. Okay. General idea, this is what the major indices look like, pretty much all of them, whichever one we'd look at. Now, if we look at the cryptocurrencies, very interesting what's happened. A pretty large sell-off as there's been risk aversion, a sell-off of some of the higher risk instruments. But now that the fear is subsiding a bit, and maybe the prices are getting a little better for buying back in to these cryptocurrencies that have dropped so much, perhaps it's something that could interest those that are into the crypto trading. So if I put Bitcoin, I can see the drop. If I go to, let's say, 1-day candles, we see a support level down here. Let me slide this line down. Okay, there's a bit of a support right down here. Oh boy, this is an ugly chart. Let me delete some of the lines that I have on here, some old lines from days back. We'll just get rid of all of them. I even have some vertical lines, which we really don't need. Okay, so here's a support level on the 1-day candles. And you see back here, going back months, these are 1-day candles, support, 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 support. And then it goes way up here for a while, and here's the sell-off. And look where these wicks are bouncing from. The same support level from back here. It hit and bounced, hit and bounced. And now it's near that price and trying to bounce again. So those of you that are into the crypto trading, boy, this is a great technical entry point. Okay, great technical entry point because we're near a major one-day candle support level that we see some bouncing off of it already. So, you know, you want to moderate your trade sizes with Bitcoin because one coin is a pretty large value. So you need to make sure you're taking trade sizes that make sense. One lot is 10 coins. So 0.1 is one full coin. So maybe I'm going to go 0.10 and I'm going to buy on one coin. Okay, if I wanted to do that, then I'm putting my stop loss based on this technical analysis below the one-day candle support. And I'm putting my take profit maybe at the first resistance level here. Okay, now I have a larger potential profit than I'm risking, almost double the potential profit compared to risk. And the fundamentals maybe are on my side. US dollar is not really strengthening much right now. Things have calmed down. So if the US dollar decides to weaken a bit, Bitcoin maybe can bounce back up, at least maybe to the nearest resistance level, right? So just kind of a conservative move with a nice support level on the one-day candles showing. And boy, you could easily get a bounce after this much dropping that we've seen over the past weeks on the one-day candles here. Okay, so just some ideas. Certainly, if you think Bitcoin is going to keep dropping, by all means sell. But I'm looking at the technicals here along with the fundamentals. It looks like a potential nice opportunity to go after a bounce here. And so then we can look at Ripple and see almost the same thing, right? We look at Ripple. Here's the support on the one-day candles, which was old resistance here. We see resistance, down, resistance, resistance, breakthrough candle here, breaks through this price level here, and then it becomes support, 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 support. Okay, old resistance, breakthrough candle becomes support. Classic technical strategy to buy from the old resistance level, which is now acting as support right here. So easily you could have already profited off of this price level a couple weeks back. It bounced right off that support nicely. Now it's near it again. So if you want to diversify, Ripple could also be something else you could be interested in. Stop loss below the one-day candle support, take profit at the first resistance level maybe, and that's about an equal risk to potential profit. Okay, maybe taking advantage of a nice price point with a nice support level, with the fundamentals potentially on your side here, with the US dollar, with some inflationary fears there, maybe ready to give ground again to some of these cryptocurrencies. Andres, I can't say I'm an expert on sugar, but specifically, but I would trade sugar in terms of the technicals the same as what you're seeing here with the others. I'm doing my technical analysis, even if it's soft commodities, but I would say the fundamentals, research the sugar fundamentals specifically to understand the fundamental analysis behind it as well. I'm certain, as with other soft commodities, there are harvest seasons, right? Like there is with wheat and corn. Sugar probably is the same, certain times of year. Weather patterns affect these types of instruments. So if you're trading sugar, I would look into the farming side of things, the harvesting side of things, to make sure you have an understanding of the fundamentals, the seasonal effect on that type of instrument. I don't want to speculate on the fundamentals on that without doing that legwork first, but it's an interesting area to trade, actually. I have a number of clients that are into those soft commodities, and if you study the fundamentals behind it, you can really gain a market advantage when you decide to place trades on it. Very good question. Okay, I think this is a good place to stop. We've been going for about 40 minutes, and we've gone through a variety of instruments, even delving into the crypto world here. So I think you're going to continue to see some nice potential bounces off support levels and reverses off of resistance levels. So buy limit and sell limit pending orders on a lot of these instruments show good potential when the markets are ranging like they are right now. You could prepare some buy stop and sell stop pending orders in case an unexpected headline hits, right? So if the unexpected headline hits, you could have a buy stop pending order above the resistance on crude oil or below the support on crude oil, etc., in case there are breakthroughs, just to be ready for them. All right, everybody, thank you for attending. Good luck with your trading through the rest of the evening today and the rest of the week. And I'll be back at it on Thursday afternoon. I have a session at 11 a.m. UK time. All right, bye for now.